Hello traders, in today's video let's master price action trading. Here's the interesting thing, although price action trading actually I would say is the most popular trading approach, thing is it's really loosely defined because it doesn't have like strict trading rules as it is with, for instance, trend following, where we are actually able to understand really well what someone meant by trend following when he says it. With price action, it's slightly difficult because, well, price action means any kind of price movement. If we are looking at that in its, I would say, pure definition. So here we have to have some, I would say, borders and some better understanding how actually it looks in practice, because I would bet at absolute majority of times, most of the traders confuse it. That's why you need to understand this correctly, and for that you need to watch this video. So let's roll on. First things first, price action trading is method of trading where you are primarily concerned and analyzing price movement itself. So we are not overly analyzing fundamental factors that might anticipate price movement, or we are not going to look at indicators, which simply means looking at markets through perspective of indicators. But no, here we are looking at markets straight up. We are looking at markets as they are, and we are analyzing primary price action, and everything else, that's only, I would say, additional information that we need once we have made main decisions. So let's look at the prices itself and see how actually price action works. The first thing, of course, is to understand charts themselves, and for that I would say Japanese candlesticks are the best approach. So although it's not the best trading tool, we still need to understand what Japanese candlesticks might interpret and how they actually look like. And for that, of course, we have to see some practical examples. All right, now we have daily chart on S&P 500 and 1 hour chart on euro against dollar. So Japanese candlesticks. Here the thing is simple. If they are green, they are rising. If they are red, they are falling. That's default option. And here we have to see how deep they are and how structured they are. So here is simple definition. You could see beginning price, closing price, highest price, and lowest price. So that little line which is empty, that means prices probably have opened here, fallen to these levels, then reversed, went as high as here, and then they slightly reversed again. So this is the empty space is the minimum or maximal price with that price range. So it gives you really cool additional information, and it's important for that if you are purely looking at prices. But this also might mean that there is pattern not only within one candle itself, but how these candles actually are stacked together. Let's have a good example of how does that work. For instance, markets might be strong and they might have good upwards trend move, but at specific time that move will end, and that will be shown in candlesticks as well, where we have some good example. Let's see. Here is a good example of falling market, because for instance we could see all these candlesticks are red and they are not going to give any leeway for bullish markets. Yes, one might see that there are some disruption patterns, but overall, if market is red, do not go in opposite direction. If market movements are strong, well, there is simply no way for you to go against it. It works both ways. For instance, here also markets went slightly higher, but there was a strong move right up until one pattern, and this was doji pattern. You saw markets were strong, they kind of actually left with smaller volume, and then we saw this pattern when we had doji pattern, when we had small move at either direction. So markets were in between, it made small upwards move, then it went to have small downwards move, but we had huge gaps and huge empty spaces both in bullish and bearish places, and it went nowhere. And usually that sign market has ended itself. So yes, consequently it continued to fall rather than rise. That's example how candlesticks work. But here, as you saw, you probably shouldn't use it in isolation without against other indicators. It shows simply as, I would say, pattern recognition device, and if everything else goes well, Japanese candlesticks might be tool which makes or breaks specific trade approach. So if you are seeing bullish or bearish pattern, and if you are thinking that it might go and change direction, Japanese candlestick might be that tipping point. It's not the base, it's simply tipping point when you are seeing that markets have overextended themselves, trend has ended it. And if you see pattern like that, and if it confirms with other indicators, that might be a good indicator, but not without any other context. Otherwise, it will be way too risky. You have to understand, you have to have additional information from prices, and for that you need to have support and resistance lines. This might come with many variations. You could have them with manual lines when you are drawing something yourself. For instance, here you might have support line and here you might have resistance line, and hope I didn't mismatch them, support and resistance lines. I usually mismatch these terms, but you understand, one is for lower bracket of prices, one is higher bracket from prices. Or you might have some support line here when you are using it manually, and yes, it might work as also more or less analytical tools. You could draw it by hand. For instance, you might have for it a line with support levels. For instance, here you might have manually drawn support line here or manually drawn support line here, and then you could use it to analyze price action. So we might have support line drawn by hand. Otherwise, we could use that with Fibonacci levels. For instance, we might draw Fibonacci levels, and it works wonderfully if we are topping it from lowest to highest price, and then it actually could draw further support and resistance lines. As you see, markets move between these levels really nicely. So Fibonacci level might be another idea how you could draw support and resistance lines. And thirdly, you could use something as Bollinger Bands. Here, Bollinger Bands also works wonderfully. Middle line is simply moving average, which shows you direction of trend, and upper and lower bands are simply other price, I would say, indications of previous price moves, the variations of moving average, but it's not that important. What's important is to understand that it works as a support and resistance, not lines, but levels. So for instance, you could see that trend is upwards, and this is resistance line. Here, trend is below moving average, so it's in the downward trend, and here lower band works as support lines. So it actually, in my personal opinion, works way better than it is with simple manual lines, because manual lines are highly imprecise. So if you want to have as good Bollinger Bands indicator as your lines, then your lines have to be drawn with several ways. I would say you will have slightly worse result anyways. So yes, there are lots of ways how you could draw support and resistance lines, but they're really important if you want to trade on price action. But it's up for you to decide whether you would trade support and resistance lines simply for range trading. For instance, if you use these lines and see whether you could actually trade within this range. For instance, if you think that markets are not going to have strong movements, or you want to trade it from price breakout levels. So that means prices actually will break previous support and resistance lines and make new heights and new lows. That's actually a different story, but here, nevertheless, you have to understand support and resistance lines and candlesticks. To understand this better, I'm seriously suggesting for you to join my Telegram channel, because there I'll be showing you lots of examples like these, where I will be drawing Japanese candlesticks, where I'll be showing you different support and resistance levels, and show you how actually you could stack that together into real trading signals across different markets, across different time frames, and with real trading examples. And in addition to that, you will get free trading signals, which will simply be based on this type of trading approach. If you want to have all this for free, all you have to do is join my link below the video and you're all set. So join me there and you will see how professionals make money there. But now let's conclude this video. To understand this price action trading strategy, this was more or less approach, and I showed you here simply that prices are the ones that makes market moves. So first things first, you have to understand how to see Japanese candlesticks and what are their patterns, whether they are bullish patterns or bearish patterns, and might there be instances when trends have actually ended it, and this is for you how to decide to trade on it. And secondly, the basic of price action trading is to understand support and resistance lines. So you could either draw them by hand, you could either use Fibonacci levels, or you could use something like Bollinger Bands, and actually they will show you the range of markets. So here's how that would look in practice. We have the same chart, and we could see, for instance, these are support lines, these are resistance lines, this is main trend lines. It would make to trade us either at bullish or bearish levels, and here we could have Japanese candlesticks. We could see simply here that we are at a bullish level. We are constantly trading at resistance lines, so we could actually see whether we could make some bearish trade or not. Here in this case, not because markets actually here were strong, but then we suddenly saw that markets actually started to have more volatility and they showed doji patterns, which I showed you previously from Japanese candlesticks. And then markets fell. So here we have one trade. We don't go against price action, but we see that price action ended it here. Price is closed below moving average. So one indication and two indications, we had even breakout from previous support levels. So that meant we had nice short trend. So this is how you actually stack all this together, what I just showed you. And this is one example of price action. But there are lots of ways how you actually could trade properly by price action strategies, and you will see them in other videos. So make sure you are following me, because approaches are different, but they are all important, and this is for you to decide which approach will be best for you. So join my Telegram channel, watch other of my videos, and you will see additional information about price action in real trading environment. So stay tuned.